This is Chicago Future Finance. I'm Oliver Renick. Back in town after heading to New York. Had a great time at the Benzinga FinTech Conference in downtown Manhattan. It was nice to get a taste of the old New York City finance vibes, catching up with folks, having to routinely explain why Chicago is the future of finance. Here's the quick reminder. Chicago, number one, we're in Chicago. Future, number two, you skate where the puck is going. The money's been flowing into options. Options have enabled people to bet on the future of the stock market in a way that has become now the most real cutting-edge, popular way to invest. The major benchmark players that are based here that have been enabling those tools. That's the future, right? Looking ahead. The reason why you get 7.5% in the market is because you are making a bet on the future that capitalism works and the system holds. We're seeing a little bit of that today. Obviously, sometimes it disappoints, but the return is expected. And again, today we see the market trying to firm up on hopes that the system will continue to work, that the government will start functioning again. The finance part, the Webster definition of finance is the management of large sums of money. And the RIA and advisor world that's parked here in Chicago is doing just that. So, as I mentioned last week, I'm producing the show live, so bear with me, but we've got a good little assessment of the market coming up here today between the squad, Brent Kochuba, Pete Najarian, and Scott Bauer, and myself. I think that the market is looking pretty decent. This is a really important week to get equities back on track, to see that the market in stocks is holding up despite the fact that you do have Bitcoin under some pressure. I think tells you that my risk radar has been pretty solid. Here it is. Yellow on stocks, red on Bitcoin, yellow on bonds, yellow on the dollar, and green on gold. So for the S&P 500 right now, trading 68.53, you're in pretty decent shape. 21 points up on the day, and VIX slightly lower, back down below 18. I think all that works pretty well as we're looking at the potential for semiconductors to lead the charge after the big move in AMD, the drop, the pop, stabilizing. SMH is down 1.9%. That's your problem area of the day. So do keep in mind that you really want to see that market firm up. Here's the look inside SMH. Right now, 352. Looking at NVIDIA, down 2.5%, holding roughly the $190 line. That's pretty important as well. Glancing at AMD, since that one's already reported, down 1.5%. You're not getting much there either. But I do think that generally the fact that the market is holding in today is a pretty darn good thing. It's kind of what you've got to hope, because if you do believe that the government shutdown has been one reason for the market pulling back, which I largely do, then you want to see the market firm up on hopes that the government shutdown might lift. We'll talk about a little bit of that coming up on the show, but generally, if you just kind of glance real quickly at Kalshi and looking at the way those odds have shifted, it does look like the hopes of a deal getting through are going up. So that part I do think is generally pretty hopeful. Here's the look at Kalshi. You can see more than 43 days and more than 44 days are both dropping here over the last 24 hours. So we got to 42. We set a record for the government shutdown. Insane that it went this long, but you know, hopefully the market now has something to move on in a positive way. That's generally my thought overall. Let's bring in Mr. Brent Kochuba joining me from Spot Gamma, of course. He was with me in New York, and we had a great chat with the folks at Benzinga and the conference. And we obviously talked a lot about how the flows and dynamics of the market in options trading have been so monumental. So tell me about those flows today, Brent. What are you watching?
Yeah, there was quite a bid to calls, and that bid actually picked up pretty quickly after the selling that we saw about a week or two ago. And I tend to agree with you that it was the government shutdown was a big catalyst. There's also the talk about the AI narrative, of course, being dented. There's the somewhat infamous conversation with Sam Altman in the recent podcast he did, which brought or invoked concern about debt around OpenAI. You have the Oracle credit default situation. Then today you had SoftBank selling the NVIDIA shares, which seems to kind of have dented the AI narrative again. Now, all that said, the fact that equities look pretty strong today is, I think, a pretty positive signal. And ultimately, we still have the big kahuna, which is NVIDIA earnings next week. Now, if NVIDIA earnings next week are fine and benign and they don't invoke any risk, then you suddenly turn to Thanksgiving, which is a holiday that a lot of people don't want to own vol through that holiday. And then very quickly after that, you're going to turn eyes go to FOMC. So I think that while a lot of people are recognizing kind of economic weakness, dent in the AI narrative, you still have these end of year kind of fundamentals, the seasonality, which everyone expects coming into play. And there is a undeniable buy the dip mentality in this market, as we saw in the two October drawdowns, that is still in place. And I still think that, holds the baton here, where you really have to forcibly remove that buy the dip response via some materially negative economic consequence, that will remove that bid, right? That vol suppressing bid is still just, ultimately, I think, the biggest dynamic in this market.
Pulling up spot gamma right now and looking at that steady bid coming into the market right now. We're at what, 218 in Chicago. If we rewind, you can kind of see the way it steadily has been climbing really since the morning. So, it looked like maybe we were going to get hit early. So now I'm moving forward. We're going through the day here, 11 a.m., noon. I think the stories about the shutdown potentially getting lifted and some of the Democrats coming over and finding some middle ground. Look, I mean, you got to hope that we can have some functionality to find some middle ground. I really don't think that AMD earnings were the reason. I don't really think that the AI. I get your point about kind of some of the concerns around maybe debt and Sam Altman profitability around this stuff, but it's just again another weekend spent where I did what did we do? I did one panel with you. We did another panel with the crypto ETF guys. So it was like 7 people, 8 different folks across panels, traveling, trying to get the show ready, and AI is constantly in my pocket throughout that. So it's just, it's hard to really, and then you see the numbers from the semiconductors, and they look pretty solid. So for me, if you were looking for a reason to sell stocks, the government shutdown was probably the best reason. We also talked last week too, is that, remember, they talked about doing all these massive federal layoffs, and then it kind of fell short of that with the Doge theme that didn't really live up to those massive federal layoffs. So, but the government not working for months on end is effectively a layoff. So I think the market didn't like the idea of that to begin with, and didn't like the concept of shutdown either. So if we can't rally this week, then Brent, that's where I start to say, okay, maybe we do have some issues here. Like if the government gets back to work and we still keep dropping, that might be a different story.
And also Friday afternoon, things were not looking very good around 1 or 2 o'clock. The market was sliding and vol was starting to pick up. And then all of a sudden the rumor came about that they were going to find a deal, and the market ripped right on that headline, on that news. And the same thing on Monday, right? Just follow through purely on the government headline. So that was absolutely the driver. I think that you have the loss of the AI narrative is the overarching concern, but that short-term vol was, absolutely a government shutdown story, just based off of the reaction on the headlines and vol coming in since then. And then today is a 0DT based day. You can see that big spread there, those big purple and pink bars there is a 0DT trade on the day. So if you're a 0DT trader, and you're in the 0DT flows, then guess what? Today is a risk on day because there's no shutdown that's going to affect you today. There's no AI story that's going to affect you today. So, those short-term kind of correlation 0DT trading games can pick back up. And that's such a big driver of the day-to-day flows.
Okay. Tell me where else we should be looking here in spot gamma. I'll let you drive here, Brent. What's interesting to you today? Where should we find, as you point out, big gamma walls here, 68.55. So I guess if we press up to that, then that's kind of, a good thing if we can get through it.
Yeah, and on that map, you see generally the color of the map is blue below 6,800. So I think we're now in kind of a risk-off stance, or you have to give benefit of the doubt to the bulls as long as we're above 6,800, because we're seeing positive gamma below that level. By far, to me, the most important signal at the moment now is volatility. Is the VIX going to start to trend in? Is fixed strike vol going to start to kind of capitulate here? It's been a little bit sticky at elevated levels. There's a little bit of a vol premium into some of the data we have this week, and then obviously the aforementioned NVIDIA earnings next week. And if that vol starts to collapse, and it should collapse by default because of the upcoming holidays, right? We should people want to generally be short vol over those periods, right? Those holiday periods. So I think people just want the excuse to release that vol, but they need the clearing of the economic data and NVIDIA earnings before they can really get in gear. So we're going to be watching that S&P term structure and the VIX curve pretty closely here.
Okay, pulling up your volatility dashboard, I'm going to go over to term structure to that
Yep.
point. It looks like this is starting to flatten out a little bit.
100%. And if you add the forward implied vol there, like that, and then the left switch,
Gotcha.
then you see that big peak, right? There's one big peak all the way to the left, and one more left there.
Okay.
That one, 1119. That's the
1120,
NVIDIA
yeah.
earnings, right? That's the NVIDIA earnings impact. So the fact that you see those NVIDIA earnings still impacting S&P vol is the signal, look, this is what the market cares about. The data points this week are less of an issue, right? Those data points have come in sharply. And then after that, eyes will turn to FOMC, December FOMC, right? So again, if we get past earnings, we hit OPEX, we hit Thanksgiving, and there's a lot of reasons for people want to sell vol, and when you sell vol, markets get buoyed by that. And then of course the overarching narrative along with this whole thing is just the seasonality, right? I was just talking to Michael Ball over at Bloomberg, and he was mentioning like how strong small caps are in November. They're generally up a couple percent historically, during this time frame. So this is a seasonally bullish market that people really are holding on to that narrative and that theme by default. So this is I think a bullish market, and that narrative has to be kind of forcibly taken away. The default here, I just think, will be higher as people sell vol and just kind of continue to buy the dip into year end.
I like that. The buy the dip needs to be forcibly taken away. I'm quoting you for that right now and firing off a post on X because I do think that is the case. Forcibly taken away. The 68.55 too is not too far away. Like we didn't come off too hard ultimately from the highs. I know that some of the stuff got hit pretty hard, right? You did have a couple big dents made in, like an NVIDIA and some of the more kind of juicy, high rolling stuff that had been a little frothy. So I understand that. Bitcoin and crypto is, I think, the biggest example of that. It's struggling again today. So I don't think it's like, in the woods for risk across the entire board, but the earnings supported stock market with semis at the core, ultimately, I believe you will have to forcibly take that away. Kicking and screaming.
Yeah, 100%. Yep.
Okay, so the vol structure then, basically once we get through NVIDIA, it seems like that will really, that confirms that theory where, they can't bomb, because that's the catch to it, is that if there are any gaps in the narrative, then yeah, we're vulnerable.
Yeah, and I can't tell you when NVIDIA last missed an earnings in any kind of material way. I think it's almost like an inalienable right that NVIDIA beats, right? So it's if you're betting on that one, I think that you have the odds probably against you. But just calm earnings or inline earnings, I still think keeps that general narrative intact, and into year end, people really just want to kind of like count on a bullish tailwind at the end of the year, and then focus on a lot of the economic risks and a lot of the other problems that we have here, which, the list is growing. That's maybe a little bit more of a next year thing, because you're going to be fighting the flows here over the next 4 weeks.
Yeah. Brent, I'm looking at the NVIDIA chart right now, by the way, which is holding 194. But before I let you go, give us a little teaser. We talked this weekend, some of the guests that were at the Benzinga FinTech conference, about the stuff you guys are rolling out. Obviously, we talk a lot of gamma, but you're going to continue to develop some products that are looking at other second derivatives. So kind of give me the heads up on what's coming down the pike for you guys.
Yeah, our big product push here in the year end, we just launched an options calculator and a couple of great volatility tools. We're going to be looking at kind of codifying how Vanna is a driver of market flow. So we're going to be making some key updates to the market there, where traders can come in and see, okay, just how much can changes in vol move S&P price? And so that's something that we're heavily focused on here for a product release into year end.
Okay, nice, cool. Well, we'll be looking forward to it. Hopefully we'll be able to get some of this data back soon so we get some more catalysts for the economy. But S&P, all right, the key gamma strike at 7,000, but much closer, 68.55. A good bit of stuff built up according to your analysis. So hopefully we can push through that, if not today, maybe tomorrow. If we get
100%.
Kick back into gear. Thanks, Brent. Good to see you this weekend.
Thanks, Oliver. Take care.
All right, you got it. Good stuff. Brent Kochuba, Spot Gamma. I got Pete Najarian standing by, as I think we do need to explore some of the potential for this market a little bit further if things continue to ramp up. Mr. Najarian, good to see you, Pete. How's it going?
It's always good to see you, Oliver. That was a great interview as well. I liked a lot of that content, man. It's I
Thank you,
might I
sir.
might be different on a few of those topics, but
Hit me.
I like the back and forth.
Yeah, please do. Tell me kind of the way you're seeing it right now.
You know what? It's kind of an amazing thing what we've seen yesterday, and obviously, I think no matter what, however you look at it, this all has to do with the government shutdown, the concerns that people have. I think that is first and foremost, and the fact that you finally get the the Senate passing the bill, and now it's at the House. I think we've got a great shot, and tomorrow will be a very interesting day. But I think that's why we're seeing the markets move the way they are. I think it's been a really interesting movement. I think AI is the next level, but the spend, the concerns that people have. I think there's a lot to be said about that. And everybody keeps talking about a bubble. Well, maybe there's a little bit of something. I mean, I don't know about you, but when you look at SoftBank, for instance, did they really need the $6 billion they got out of their position there? I don't know that they did. They say they did. They said, hey, well, we wanted to get some funds. Well, really? If NVIDIA is the biggest and baddest in the world, I'm not really sure that I'd make that trade. So that makes me a little bit nervous about what we're seeing with NVIDIA. But as you guys were just talking about with earnings next week, I certainly don't expect them to miss. As a matter of fact, I expect some good numbers, but it might look a little bit like CoreWeave today, as a matter of fact, where you beat on all the numbers, but people are sort of concerned about the spend.
That's an interesting point, I think, Pete, is, do they overdo it? I'm kind of the believer if something's good, if something's working, which the AI tech is, just plow as much into it. But to your point, there's a utility curve to that, obviously. At the end of the day, these are companies that are going to have to report to shareholders, and they don't want to see them go too far over their skis. And I think that some of that is starting to creep into the narrative, to your point. So maybe it's not quite as bulletproof as my kind of simple assessment, which is I use it a lot. You need more than that when you're delivering, earnings for $1 trillion companies.
Absolutely, yeah, and I'm telling you, the amount of spend is really absolutely incredible. I mean, that was the problem today for CoreWeave when they gave up their numbers. Shoot, their numbers actually looked pretty good, but suddenly they say, well, but our capex going forward is going to be 12 to 14 billion. I think people sort of step back and go, hey, wait a minute. And then we go back and we look at what Meta was doing with Google and with Microsoft and all three of them, and you put them together. Just in the third quarter, they spent $78 billion on CapEx. Well, where do you think that's going? I think we all know where that's going, into the biggest and the baddest, which is AI. So is there a heck of a lot of spend? I think the answer is yes. And some of these, I think, get people a little bit nervous because it is so much money when you're looking at it from this perspective. Now, what does it look like 6 months from now? That's a different story.
The CoreWeave chart I've got up right now, it is, I think, important to kind of watch some of these smaller players, to your point, that are getting bigger and bigger. I mean, my small, perspective here, just kind of, compared to an NVIDIA, but down 16%. That's no joke. That's a pretty painful trade. It does, though. I mean, it does seem like when I look at the chart, $90 is trying to hold. I look back, into September, and that was a level that held. I look back to August. That was a level that held. Is this a stock that you're looking at for a trade, Pete, or are you more looking at it as kind of a narrative indicator?
A little bit of both. I like the narrative indicator part of it, and if they can actually show us some way that they're going to be able to make the kind of money that is expected for them to make while they're spending the money, I think that's pretty interesting, and that draws my attention for sure. And if you look at the highs of CoreWeave, for instance, to see where it is now. They've been cut pretty close to almost in half, and not quite, but they've been cut back pretty significantly. So I think it's something
almost
worth
190.
watching. Yeah, and I'm not totally nervous about that, but I think that there's a reason to have a little bit of doubt on are they spending too much right now? Are they going too deep into this? And you know what? Time will tell, but it is well off of those highs, and those highs were extreme. We all know that. And I think we are seeing some adjustments for some of the AI companies because, let's be honest, when you don't really have any PE, or if you do, it's somewhere up into the stratosphere. That is something that people have to understand. Whether it's a Palantir or whether it's a CoreWeave or whatever, some of these are at absolute incredible levels when you look at that, where they are right now for that PE structure, and it's nervous, I think, for a lot of people.
Fair point. I'm going to pull up a tweet that X post rather that you guys put out for Market Rebellion earlier. The Wall Street Bets top trending stocks. To your point here, the Nvidia being the top rank, but CoreWeave top 5 right now. GLD still in the mix. I think that's pretty interesting. The fact that that's keeping up so well amid all the AI excitement. You know, the gold is like right there in the middle. Such a fascinating situation we're in. It's like the options are get into these companies that are changing the world and at the absolute cutting edge of technology, or yellow rocks.
Exactly right, yellow rocks. You know, and let's not forget about silver. Silver's made an incredible move along with gold. Gold obviously gets most of the attention for all the right reasons, but you look at GLD, every single day it seems like, Oliver, we are seeing call buying for the upside, spreads. They're doing it in a lot of different ways. There was a massive trade today, a 6-digit trade out there in GLD again. So that doesn't seem to be tiring, and neither they're not tiring on silver either. Silver, I think, is back up over 50. It's had a heck of a run as well. So it's not just gold. You've also got silver. I think you guys, I think, might have talked about natural gas. Here we are at 3-year highs, because that has absolutely taken off as well. So I think there's a lot in the world of commodities that we should be at least keeping in our back pocket, kind of keeping an eye on that as we're going through everything, because every single day it's an AI day, right?
Yeah, no, you're right. Silver kind of has a little bit of some of that, maybe, industrial use mixed in there. It's a fun chart, SLV at 46 right now. I gotta say, it kind of stand out to me as something that looks like it has potential to revisit those old highs, just given the recent highs rather of near $50 in SLV, just because of the verticality of this chart here. When you get a pullback like we did in the last month, after that type of verticality, whether it's SLV or it's GLD, the charts look so similar. That's why I didn't budge these on my risk radar. I kept gold green because it's gonna take more. Like Brent put it earlier for stocks, he phrased it as, you have to forcibly, remove that kind of bull narrative. It's gonna take something to really break that. The SLV and GLD charts look to me like they could easily get momentum again.
Yeah. It's also, I think it's interesting to see a day like today where some of these new 52-week highs, or maybe even the all-time highs that we're seeing today, the explosive moves out of something like a GM or a TJ Maxx or a Datadog or whatever. Some of these are absolutely incredible, and they're coming from all different parts. I think even Seagate, when you look at that name, hitting all-time highs, not 52-week.
Cooking. Nice eyes on that. I missed that one, Pete. Seagate, I didn't realize was ripping like that.
Yeah, and you know what? That's all part of what we're talking about here when we're talking about a lot of these semiconductors. We're talking about those that feed into that whole world and how they're all somehow tied into AI as well. I think it really does make a lot of sense to keep a very close eye on many of these names, because we're seeing some incredible numbers, and we're also seeing a lot of unusual option activity, looking for a lot more than where we are right now. So if I look at it and I break it down each and every day, even on some of these down days where we've had, the market's down into the red pretty deep, we're still seeing some pretty large call buying. It's almost like a better excuse to go in there because it's a little bit cheaper, and we're seeing more and more of that.
The one that also stands out to me, I'm going to pull this up real quick again, just the Wall Street Bets themes, because if we're trying to kind of go for some of that juicier stuff, is Nebius. What a great name, NBIS, the one that did that Meta deal, right up there in the mix for these, Like that's, it goes to show that you got to stay tuned in, dialed in, because at any moment, there could be a company you never heard of, some bizarre name, and it's just pow, right in the center of the nucleus of markets right now.
No doubt about it. I mean, you do have to be on top of it, because exactly all the things that you just laid out there. I think that the other thing that is, and you're right there in the mecca of options, but what I'm most impressed with right now is the fact that, how about the fact that the way November is kicking off right now? We're averaging 68 million contracts per day so far, and the year-to-date average is 61 million per day. So November is looking a lot like October, where people are more active than I have ever seen them before. The volumes are absolutely incredible. Shoot, just the other day, 85 million traded. So people are engaged in this market, and they are moving all over the place. But if you look at the day-to-day, I'm seeing a lot more calls trading than I am on the put side.
They're cooking, man. We're cooking. Any trades that you're in that you like right now, Pete, before we go to some of the event contract stuff?
Sure. I'll just point out a couple of things. I think one of them would be like a Cisco, for instance. And I did buy some calls. I saw some unusual option activity in there. And what are they looking for? Well, they've got earnings in a day or so. So that's one of those, and they're looking to the upside. I thought that was pretty interesting. We did have a volatility trade today as well. They bought about 19,000 of the middle of November calls to the upside at the 20 strike, which is a lot different than what we've seen in the past, Oliver, where they're going pretty high. They're going for like the 35 strike calls or the 40 strike calls or whatever it might be. This one's right back down to where we were, and we've gotten up and over 20 multiple times over the last few weeks, but we just don't have any sustained ability once we get over 20 to stay over 20, and we pull right back again. And so here we are once again trading right around 17, but that Cisco trade, kind of interesting. They were coming for the 74 calls. I guess we'll see how it works out, but some pretty decent sized volume there as well. And the last one I'd give you would be the India ETF. That is hitting, it seems like, day after day after day. And
was it INDA? Which one is that? INDA?
Well. Yeah, INDA, yes, sir.
Nice. Yeah. Pulled that one out of the where.
Love it.
That's an interesting chart, by the way. The broader international theme that was so strong at the end of the year, at the beginning of the year, kind of disappeared from the conversation a little bit. And maybe, that'll come back if we start kind of gearing up the tariff convo again. But it is interesting to kind of think about some of the international stuff that did so great in the first quarter into last year as well. The other thing I would just say from the Cisco chart, since you mentioned that, just a quick thought on that is that's also a pretty unique looking chart. Cisco is sort of its own beast in the AI world, and it always has this kind of almost like agnostic to the rest of its peers type of trading behavior I've noticed, and I think that makes for a unique market to trade it. We just put in highs and then we pulled back. It feels like it's just disconnected by like a couple days or a week, but very unique. If you look at more broadly the SMH chart, it looks quite different. If you look more broadly at the cloud chart, it looks totally different. Cisco kind of right in between is a fun one, I think, for folks to think about as a unique trade.
Yep, it's just one of those names that they've been around forever. It's like an IBM. They've been around forever. They've been, moving with the markets in the way that they need to. Obviously, IBM made a huge buyout to be able to get themselves back into the game in a lot bigger way, and I think they did a smart job by doing that. But I see somebody like Cisco who they just are, they're the train that could. I mean, they just keep on moving along, and they do a great job. And I think that the earnings that they deliver, it'll be pretty interesting. And like I say, we don't have to wait too long because that's coming up very rapidly for us.
Okay. If you got 2 minutes, Pete, I want to hit some of the Kalshi stuff. Let's get into the gamble here.
Okay, video.
Yeah, it feels like it's extra loud today. I don't know what's up with that. Sorry about your ears, Pete. Okay, here's Kalshi. I got a few pulled up for you, but let's just go government shutdown first. The fact that more than 43 days or more than 44 days have both now dropped pretty substantially, I think that tells us that this deal is going to get done.
I totally agree with you. I think they're going to get this done. You know what? People are frustrated. People are angry. All the different things that you can imagine. And I've been flying a lot. Believe it or not, knock on wood, it's been great for me. Absolutely great.
I was lucky to get through. I missed my first flight, but it was my fault alone from New York. Par for the course.
It's been great. But I will say this. I've talked to a lot of the people that are working there, right? And I say, hey, how's it going, man? Are you doing okay? And they're like, I need to get paid. I need to get paid. And I get it. And I do love what I heard Trump talking about, which is bonuses for the people that are working through this not getting paid. I mean, that'd be
great.
Interesting concept, right?
Yeah, that'd be fantastic. Okay, now in terms of the other macro stuff, I think the market still is pretty convinced, 72% next cut from the Fed. And I guess that also arguably, if there was some financial strain, some economic strain from the shutdown, then maybe it gives the Fed kind of another excuse to provide a little support for the economy. Look, my view is I don't think we necessarily need to be cutting, but we definitely shouldn't be hiking. And so by default, I kind of think about, if you're not hiking, why not cut? That's kind of my view on it that I've come to over the years.
Well, and I think if you go back in time, we could say, you know what, they missed their time. We always have talked about, the Fed and how they not done to the quarter point cuts when we were expecting them to come, and they didn't do it. And I think that maybe there's a little bit of a makeup spot there. I don't know, Oliver, but I think either way we are going to see that cut. And like it shows, 72% looks like that's the lean for most everybody.
Yeah. All right. The ones that I thought maybe you might be interested in, people are betting that KC is going to be the pro football champion at 13%, slightly edging out Philly. Sorry, Eric Balchunas, Bloomberg, shout out, who I was just messaging, but at least I'm sure they're happy to be in the running. What do you think, Pete?
I like what I'm looking at there, but I disagree with both of those teams. I don't think either of them actually get into the Super Bowl. If you asked me directly who's going to be there, I'd say, you know what, keep an eye on Seattle, keep an eye on the Rams, keep an eye on a few of these teams where they are in a sort of destiny, sort of a world right now, and it's kind of exciting. But the easy play is to say Kansas City and Philly, and let's see how they play it out. I don't know that they get there, and I really do think there's an opportunity for both of them to get knocked out. So we'll see. I'll go on that side of this whole thing.
All right. Well, look, I got a follow up for you there on that one, which is Kalshi's got Seattle at LA. So they got Rams at 60% right now. What do you think about that there? Since it seems like you like both of them, could that be a major clash there?
It could be a major clash, and you know what? The 49ers are just so banged up, it just doesn't seem like it's going to be their year. So when you look at it, the Seattle going up against the Rams, I just talked about the Rams today and the fact that the quarterback of the Rams has been absolutely lights out. He's 37 years old. This is probably one of the best seasons he's ever had. He's got 25 touchdowns, 2 interceptions. I'll tell you what, when you're that efficient, I think that's a guy who is doing everything right. He's got the right receivers, the right players around him. I'll take the Rams on that 60%.
All right. Nice. Like that. Okay. So buying it. That's a pretty good trade. I mean, 40 on 60 is good. That's a classic. That's the heart of your poker strategy right there. You want to try and get 2/3 instead of flipping coins. Thanks, Pete. Fun conversation, sir. Good one. Like the mix from trading AI into a little bit of a government shutdown and a little bit of sports. Mr. Najarian, thank you, as always.
I love it, Oliver. Thanks a lot, man. See you later.
All right, you got it. Have a good one, sir. Pete Najarian, Market Rebellion, always fun. Going to take a short little break, come back, go through the risk radar, a few other items, catch up with Mr. Scott Bauer. We got 16 minutes into the bell, and we're looking pretty decent. Not much has changed, so we lost a little bit, a few points there, but the market's still holding in. We'll be right back. There are two things about Chicago finance you can't get anywhere else. The first is kind of hard to miss. Everyone's trading options. Cboe is on a 5-year growth streak making billions, and its goddess of grain sits atop the final pit of open outcry. And that's what it's all about. The chance to fend for yourself. A fortress for the self-made trader, and the only still standing in America. The second thing you may not know, but it's worth trillions. Chicago is the only major city in America that's home to 2 of the top 10 registered investment advisors, according to Barron's. That means a steady river of passive money and fixed income pouring into the city. If you think you can beat the market, this is where you do it. If you've got value, price will discover you here in Chicago, the future of finance. Join me, Oliver Renick, from Cboe, Tuesday, Wednesday, Thursday, into the closing bell, live from Chicago. All right, welcome back. Stocks are in pretty decent shape here. We're trying to close strong and hold up after an early dip gave way to some strength. Markets are making a good stand here today. A few things that I want to point out as we go into the bell here. A couple things that I'm watching is I do think this is a very crucial week. The reason why this is a crucial week, obviously, is because things did break down a little bit over the past 5 to 10 days, depending on which asset class you're looking at. The first asset class, obviously, that's most important is the S&P 500. The chart for the S&P does right now look pretty good. This is generally why I have been overall positive on stocks. Now, I do have a yellow light on the risk radar, but that's largely because I wanted to see how stocks interacted with the weakness in crypto. But here's the bottom line. SPY at 683. That is very close to the recent high. You basically had a dip and you're coming right back, trying to push through an area that had a good bit of a week-long trading. That's about 683 in the S&P 500 ETF. For the SPX, it's 6850. So this is a chart that looks pretty darn good, pretty steady higher lows. The question, of course, is if we get a higher high. Note that the last push we had higher in the S&P up to 69, 690 for SPY was a real good rip. That was the rip from 670 that happened in October, late October. So that was a real fast move. It was a gap up move after there was a period of consolidation through October. That means that there's pretty good momentum still behind us, given that the dip that we got in the last week just brought us down to 665, 6650. That means that you put in the higher lows. That's really important. So that light on the risk radar for stocks is going to be pretty quick to flip back green, assuming that we do put in a higher high, and that's pretty much the basic technical indicator that I want to see to get the green light. The reason why there's still yellow on the coins, or red on the coins rather, BTC, is because the chart just looks totally different. And there can't be enough said about this. I've talked ad nauseum about the bearish divergence that's still in BTC, and that is indeed the case. You look at IBIT, since that's what so many people are trading at this point, and the chart does look pretty dicey. The fact that we had a higher high that came with lower momentum, measured by the RSI. For IBIT, that was 72. And that basically immediately broke down. The fact that you had a false breakout in IBIT, the false breakout in Bitcoin that then rolled over in the last couple weeks, could just be a Bitcoin specific, a crypto specific exhaustion. Maybe the Bitcoin treasury companies kind of did their trick to get people rallied about the next incremental buyer. But ultimately, after the government gets on board and had such a strong endorsement through the Trump administration, if you have that and you've got the Bitcoin treasury folks, those are big buyers that kind of leave you wondering who's next. And I think that the government is essentially the top of the ladder. How much higher do you climb? Now that's why the yellow's on stocks, because the yellow for stocks reflects the red in BTC, because for a long time, crypto was that leading indicator of risk appetite, but I'm not sure that's going to be the case anymore. One big reason why, of course, is because of what's happening in semiconductors, and that's where NVIDIA comes in. as Brent Kochuba pointed out, the big spike in the volatility futures curve is going to be crucial to watch. The fact that we did get a big move around AMD, we dropped, but then we popped. You had a solid back and forth. That kind of leaves everything on the table as far as NVIDIA goes and what the response might be there. I think the other most important chart is the one from Spot Gamma. I'll pull that up right now as well. That's the pop right here in the November 20th VIX term structure. That means that there's a lot of volatility premium that's getting coagulated, stored up, parked around NVIDIA earnings, because ultimately that is the main driver of the themes of tech and why the stock market is separate from crypto. The reason why I was such a crypto cynic for so long is that other than online gambling and poker, there was never really any use for me personally, but there's tons of use for AI all around us. And that kind of brings me to the other major theme that we want to be watching, which is what happens on some of the semiconductor and AI related Kalshi bets. I want to go through a few of these because this is also, I think, crucial. Seeing who's going to win the AI war and the arms race basically that's happening is a pretty fun game to play. Right now, Kalshi says Gemini from Google will be the best AI at the end of 2025, and I couldn't agree more. That's the default that I use on my phone, hold the button, press, and boy, do I get a lot of fun answers, though. Sometimes it works against me, being a little too smart to pull out the AI to prove people wrong, but, you know, it's not me being a jerk. It's just we get the facts. AI has essentially taken all of the same breakthrough internet functionality and search functionality and put it on nitrous. So that's why I want to watch to see who wins this race. And by the way, looking at the chart here, this was not an obvious play that Gemini was going to pull ahead the way it is. That's why I think you really want to watch Google. Very important. The chart for Google looks great right now. That's one of my other very key charts. The fact that Goog's been just ripping and trying to break out today, the fact that you have a small move in Google to the upside, I think is really, really important. That tells us that there's appetite for the leading AI, as there should be, which means that you have the core story for the stock market still intact. I don't think that you need to assume because crypto's weak, stocks are going to follow anymore when you've got real value and real function from the semiconductor trade. So I want to watch what the best AI is. And I think it's going to be fun to see some of the other themes for AI and how that plays out. One of them is the self-driving cars. Kalshi's got another really good one, which is the bet on how many cities will be operating Waymo at the end of 2025. Now that's gone down, but still 4 is 85%, 5 gets to 14%, 11 or more is pretty much dead money right now, but the fact that you still do see this progress being made, that's another really very crucial adaptation of AI that I think is very real. The first time you jump in a Waymo, it blows your mind, or any other type of self-driving car. So semiconductors are at the core of it. The VIX term structure around NVIDIA earnings tells us that that's the most crucial thing for the market. So if the government shutdown indeed ends, which it looks like it's going to, then the market should be able to firm up. Watch crypto to see if there's any sign of risk appetite fading there, but don't get too hung up on it. I'll be pretty ready to flip the yellow light for stocks green at the first sign of strength, and Google breaking out, leading the way as now the top favored AI leader. I think that's pretty encouraging, and the fact that we are weak this morning and came back, I believe tells us that you're in pretty decent shape right now. Let's see if we can pull it through tomorrow. Let's see if we get some more economic data soon, which of course would be nice. That's the worst part about the government shutdown for a market wonk is you don't get the data, which stinks. Thanks for tuning in. I'll see you same time tomorrow, 2 p.m. to 3 p.m. Central Time here from Cboe in Chicago.